We do these webinars for Nadex every Monday night at 7 p.m. We do an educational and informational webinar for them. And tonight we're going to be talking about some of the differences between binaries and spreads. And I'm going to kind of go into this lesson tonight. Going to be a little bit different lesson, a little interactive, and I'm going to kind of go into this with the assumption that you understand the basics of binaries and that you understand the basics of spreads. Okay, we're not going to really spend any time going over the basics. We're going to kind of jump in, assuming that you know those. If you are new tonight and you don't know those, I'll refer you to a few places where you can get some information on those, catch up on some of the last few webinars you might have missed. But stick it out with us and go through it. Some of it you might not quite follow, but it'll help you out down the road, and like I said, show you where you can get some more information here. So let's hop right in. Let me knock out our disclosures here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information here in this webinar is for informational and educational purposes only, and not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And past performance, as always, not indicative of future results. So if you're brand new to Nadex, make sure to hop on over to nadex.com. You can go through some of the tabs there, get some information about the different products that Nadex offers. You can also get a free demo account with Nadex. They will, absolutely free, they will give you a $25,000 demo account. That way you can play with it. I'll show you an example of a demo account here. You can hop on over and get a demo account. That way you can get familiar with the platform, get familiar with the different products that Nadex offers, you know, entering and exiting orders and so on. Great place to practice, you know, any new strategies or systems you may be trying. That way you can practice them, master them in demo using demo money, you know, before you hop over into your live account there. All right, so definitely make sure to hop on and do that. Also, like I said, my name is John Skelton. I'm with Apex Investing. Apex and Nadex completely separate. Nadex is the exchange. Apex, we're an online community of traders helping traders. Check out our site, apexinvesting.com. We've got a ton of free education over there, some step-by-step training courses on, you know, binaries and spreads, different trading strategies and systems. We've got some news calendars. We've got some binary and spread scanners that really make finding the right binary and spread a lot easier. Some free deviation levels. We'll show you how to get some free charting platforms and data. All that you can get absolutely free with a basic membership to all of the education there. If you have any questions, you can hit us up over there on the live chat, or, you know, submit a help desk ticket. But tons of free information over there to check out. So make sure to take advantage of the free tools that are available to you with the free education and with the free demo account with Nadex. And while you're at it, hop on over to facebook.com/apexinvesting. You can like us and follow us there. Get updated on any new webinars coming up, any news information you might need to be aware of, new trading strategies and systems, anything like that. Once you've liked us there, hit the like button. Click all posts, make sure you get notified of anything coming up there for you. Okay, so we're jumping right in here. Tonight, we're talking about binaries or spreads. And like I said, if you're brand new and you need to catch up on some of the basics there, there's a ton of great information on the Nadex site as far as education on binaries and spreads. There's webinars there in the archives that you can check out, or if you do check out the Apex website, like I said, a ton of information over there, some step-by-step courses as well on binaries or spreads. So a couple of links there for you to catch up on some of the basics, if anything tonight that we're covering might be a little over your head. All right, but we're going to talk about the differences of binary and spreads. A lot of people say, hey, Nadex offers binaries, they offer spreads. Which one is better? I don't know which one to trade. I hear pros and cons of both. You know, I'm still trying to learn both. Which one's better? How do they work? And which one should I use in different market conditions? That's what we're going to talk a little bit about tonight. So let's start a little bit. Let's talk about binaries first of all. Okay. Well, as we know, at expiration, okay, a binary is either worth 0 or 100. Okay, so let's see here. Brian says he can't hear. We coming through okay, Craig? Audio still coming through good to everybody? Just seeing if it's just Brian. Okay, I will send him a message here. So let's talk about binaries here. All right, one of the nice things about binaries, we all know that with a binary, all right, let's pull up a binary here. Let's go to Forex, just euro dollar, and let's look at 9 p.m. Okay, so we've got different binary options here. As you know, each one of these different strike prices here is a different binary contract. Let's just say, for example, I wanted to buy this binary right here. Okay, what I'm buying is a statement. I'm saying the euro dollar will be greater than 1.1385 by 9 p.m. Okay, very easy, very simple. Okay, binaries are pretty simple to understand. It's a simple true or false, yes or no. All right, so the statement is euro dollar be greater than 1385 by 9 p.m. If I think yes, that's true, I'm going to buy it. If I say nope, I don't think it'll be greater than that, I'm going to sell it. Simple yes or no. So in that sense, they're a very easily tradable instrument. And we know at expiration, a binary is either worth 0 or 100. Yes, we can exit early, but what we're talking about right now is at expiration. Okay, so if I say yes, I believe this statement will be true. I believe the euro dollar will be greater than 1385 at 9 p.m. Say I want to buy it. I want to buy one. Okay, what we're going to talk a lot about tonight is risk versus reward. Okay, so before I ever enter this order, as soon as I fill this out, before I place the order, it tells me right away my maximum loss 67.75, my maximum profit 32.25, which those two numbers together will equal 100, right? So what I have to put up out of my account is 67.75. That's the amount of my margin, and that's my risk, right? And my potential profit is the difference between $67.75 and $100. So I know right away up front what my risk is, okay? So where's the market right now? It's at 1388. So it's already above 1385, right? So as long as the market stays above 1385, which it already is, then I'm good, okay? And let's look at a different example here real quick. Let's take a peek at this one right here. This one's a little less expensive, right? If I want to do this one, it's $40. So my max loss is 40. My max potential is 60. All right, we like that. Well, right here, what I'm saying, the market again is at 1388. I'm saying it has to get to 1393. Okay, so only looking for about, it only has to move about 5 ticks or 5 pips, right? So we're not talking about a lot of movement there. Okay, so one nice thing about binaries is even with smaller moves in the market, for this trade to expire as a win, expire profitable, we're not looking here for a 60, 70, 80, 100 pip move, are we? We're not looking for a huge move. All we're looking for right here is about 5 pips, right? Which is not a whole lot in the overall scheme of how the Forex market can move. So the one nice thing about binaries is with a 5 pip move here, we can have a pretty good return on our risk, okay, with a smaller move. All right, and that is the nice thing about binaries, is all that we have to have happen is even just for the market to be 1 pip above this price, and this would be profitable, right? We're not looking for big, huge trend moves and crazy big moves of the day. All we really have to have is just a pip above this price to close profitable and have a great risk to reward there. Okay, now if you're familiar with binaries, you know there's a bunch of different ones. They're priced different ways. We've got out of the monies, at the monies, and in the monies. Let's take a look at this one right here. This is what we call an at the money binary. Because right now the indicative is at 1389, And what the binary contract states is the euro dollar will be greater than 13.89 by 9 p.m. So right now, again, we know a binary at expiration is worth 0 or 100. This one here is priced on the sell side at 47, on the buy side 56, right around 50 bucks. Well, why is that? Well, because if at expiration, if it's got to be 0 or 100, well, we're saying it'll be greater than this at 9 p.m., greater than 13.89, but right now it is 13.89. It could go either way, right? It could go up 1 pip and be greater than 13.89. It could go down 1 pip and be less than 13.89. So that's why this binary is priced around $50. Okay, and you know, if you were to place a binary trade like this, you'd be risking about 50 to make close to 50. Okay, so it's all boiled down to 1 pip. So the nice thing about binaries is with just a small move in the market, let's say that it's a slow day in the market, it's a slow night in the market, there's not a whole lot going on. Okay, well, if you were to enter like a, you know, spot FX trade, you're not really necessarily wanting to go into that trade just to get 3, 4, 5 pips of movement, right? You're looking for a bigger move. But with a binary contract, that's one of the nice things about it. It's just a few pips, a few, you know, one way or the other makes all the difference. So even in a slower moving market, you could potentially have a great risk to reward ratio there because you're not looking for a whole lot of move. Okay, so that is the one nice thing about binaries, is small market moves can make a big difference in your win or loss. If it's a slow market, just a tick or two can create a pretty large profit and good risk to reward ratio. But what is the downside to it? Just a few pips one direction can be great, but just 1 pip. What happens if the market at 9 o'clock expires at 1388.9? Just 1/10 of 1 pip against you. Well, then at expiration, this binary is worth 0, right? So yes, with just a few pips of movement in the market in the right direction, you can have a great risk to reward ratio. You have a great return on investment there. But just 1 pip or even 1/10 of a pip against you can cause the binary to be worth 0 at expiration. Again, yes, you can exit early, but what we're talking about here right now is expiration. Okay? And I know there's a lot of you that like to trade these in the money binaries. What does that mean? Well, they're priced a little higher here. And why are they priced a little higher? Well, because I'm saying that the market has to be above 1385. Right now it's at 1389. So it's already above it. So as long as the market stays where it is, or goes up, or even comes down a few pips, as long as it doesn't come down to 1385, this will still expire in the money. So you have a little bit more room there and some more options there. But you are risking $74 to potentially make $26. Okay? So again, with just a little move in the market, or right here, you don't even have to have a move, do you? Because what we're buying right here is saying it'll be above 1385. Well, it's already above 1385. So if the market just doesn't move at all and just stays right here, this binary would still expire profitable and we'd make 26 bucks, even with the market not moving, or even with the market coming down a few pips against us. As long as it doesn't come all the way to our strike, we can still profit. So with no movement in the market, or with very little movement in the market, binaries can be profitable. But again, if this just came down just 5 or 6 pips, 6 pips, and expires less than 1385, it can mean the difference of being worth 0 or 100. And if we held it to expiration and it went below 1385, we would lose this entire $74. Okay, so trying to just give you a quick overview there of the pros and cons of a binary. Okay, now yes, there are different strategies where if you bought an in the money binary and it comes down to your strike, you can get out for around 50. There's plenty of strategies there. I'm not overlooking those tonight. I'm just simply talking about at expiration, risk and reward. Okay? Now, like I said, so a tick against you, even a tenth of a tick against you, can mean all or nothing. And it can make your heartbeat go crazy, right? You can, when it's going your direction, you're feeling good. When it's starting to come down against you, it can start to get your heart racing. And because when it all boils down to just 1/10 of a tick, you've got to be right on. Okay, Rudy, you asked, why don't you sell instead of buying? That was just an example there. You can buy or sell, okay, any of those binaries. All right, if you thought the market was going down, then you could sell. All right, and you'd have a max loss of 26 and a potential profit of 74. All right, but you're only selling if you think the statement's going to be false, if you think the market's going down. All right, so you can buy or sell. I was just giving examples of both there. Okay, for example, you can choose this binary here, and to buy it only risk $17 to buy it with a max profit of 82. But what are you buying? You're buying at 1401 here. The market's got to go up quite a bit. You'd only ever want to buy that and risk that little amount if you knew the market was going up and was going to go up that much by 9 p.m. So you have options either way, to buy or sell. You've got different risks and rewards there. Okay, so now binaries, can be traded in slower markets. They can be traded in faster markets. Sometimes part-timers really prefer binaries because Nadex does offer some 5-minute binaries and some 20-minute binaries. May not have a whole lot of time to trade. Some people like that racing heartbeat, that fast-paced trading, and one after the other every 5 minutes or every 20 minutes. You either love it or hate it. Maybe it's for you, maybe it's not. Okay? Now, binaries are a little bit easier to understand than spreads because binaries are very simple. It's either yes or no. Okay? But they can be a little harder to trade because you do have optionality built in, and you do have to be right, exactly by the time of your expiration. And if you're wrong just by 1/10 of a tick, can mean the difference of all or nothing. Okay, and you must understand the difference between out of the money, at the money, and in the money binaries. All right, and like I said, I gave you a couple of links there. You can check out some previous recordings on Nadex or over on the Apex site as well. And you must pick out the right binary. All right, and you can hold it to expiration, or you can exit early and you can scalp. Okay, so let's just look. I think I have a chart up here. Let's just give like a quick example of something here. Let's say you have a chart, okay? And whatever strategy or system you use, I'm just kind of showing you one of our charts here, and I just have one of our indicators on here called the trend flip. You see it goes from green to red to green, right? Now, look at this first red bar here and look at the timestamp on the bottom. 1453, 1545, 1600, 1900. Kind of a slower moving market here, right? Well, so let's say, for example, when this flipped, saying market's going short, I can see that this is a pretty slow moving market, right? This is over, a few hours of time. So maybe, for example, I said, all right, I don't see a big quick move going on here. Maybe what I want to do is buy a binary somewhere up in here, for about 80 bucks. Or I'm sorry, sell a binary up in here for about 20 bucks on $80 risk. So I don't see the market moving a whole lot, but I'm going to sell a binary up in here, just kind of let the market mosey on down. Okay? And if it stays under this price here, I risked about 80 bucks, I'll make 20. Okay? As an example, right? But where is the market right now? 1389, and my strike, let's just say, is at 1394. So I've got about 5 pips of room there. Okay? So what happens though between now and 9 o'clock if the market comes up just 6 pips? What if I'm wrong and it just pops up? I mean, you can see right here in the candle it popped up there earlier, and I don't exit that early. Well, I could lose that entire $80, right? Just by one tick. Or I could easily make, you know, risk 80 and make the 20 just as long as it just kind of stays down here. Okay. Now I may not want to be doing a spread if I don't see the market really moving a whole lot, or I don't expect it to move a whole lot. If I think it's going to be slow and you just kind of slowly stay down here or slowly go down, I might want to sell that binary, let the market stay underneath it, and collect my $20. Or let's say I sold it for, you know, 30 bucks. I'll collect my 30. All right. Does that make sense? So let's say, for example, I don't, you know, see the market moving a whole lot. I want to get an in the money binary. I don't necessarily want to sell one way down here for 70 real cheap because maybe I don't see the market going down there. Okay. But I see the market not moving a whole lot. I can sell one up here, risk about 80 bucks. But if it pops up against me, just 1/10 of a tick difference, it can be the difference between winning and losing the entire $80. Okay, so nice thing about binaries, no movement, just a little bit of movement, even a little movement against you could still be profitable. Negative is just 1/10 of one tick against you. By your expiration time can mean the difference between winning and losing. All right, so that's kind of the risk reward there of binaries. Now, let's talk a little bit about the difference of binaries and spreads. Okay, with a spread, we know that a spread at expiration is worth $1 a tick, right? So let's say that we sold a spread right here. As soon as we got this indication, hey, at the close of this bar, we got a short, right? At 13.90. Well, right now the market's at 13.89. So we've only got 2 ticks of movement there, okay, so far. So you're like, yeah, spread doesn't seem very exciting. Well, what if the market moved down to here, to 13.80 by the time we got out of the spread? Well, 13.90 down to 13.80. That's 10 pips. That's $10. Doesn't seem real exciting to you, right? Well, with a slower moving market, like I said, binaries do have certain benefits because the market does not have to move necessarily based on if you got an in the money binary, or just a few pips in movement can mean a difference of, hey, I got a binary for 60 bucks, got $100 out, you know, expired worth 100 bucks, or I bought one for 80, it expired worth 100, I made 20 bucks, and the market didn't really even have to move. With a spread, it's not about a difference of 0 to 100, and it's not a difference of all or nothing with 1 pip. It's about the move of, well, it's about where I bought or sold the spread compared to where the market is at expiration. So in this particular example here, right now, there's only been a couple pips movement from the time we would have entered a spread to where the market is now. So that doesn't seem quite as exciting in and of itself, right? So I want to talk to you about something here, and something we've talked a lot about, and for some of you it may be very elementary or very repetitive, but it's very important, and it's one of the biggest misconceptions when it comes to risk and reward and when it comes to talking about Nadex spreads. Pretty simple on a binary, right? If I want to open this binary here, okay, I want to buy this one for 72 bucks. Okay, it expires at 9 p.m. If I don't close early at expiration, I'm either going to make 27 or I'm going to lose 72. It's all or nothing. And it all boils down to what? 1 pip or 1/10 of a pip. It's the difference between which one of these numbers I get, right? Do I get 0 and I lose 72, or I get back 100 and I made 27? All boils down to 1/10 of 1 pip. Now, let's look at some spreads, for example. And obviously the same with spreads. There's multiple spreads that you can choose from. You've got 6 to 11, 6 to 8, 7 to 9, all kind of different spreads. You've even got some of these big daily spreads. Okay, so I'm going to use one of these daily spreads just as my example here for you. Some of these daily spreads are a little bit wider. Okay, and let's see here. We can even use one of the 7 to 9s. Let me just take a peek here. It's something. No, actually I want to use one of these daily spreads as an example. So let's see here. So the market's at 1389. If I was to say buy this spread right here, whoa, what is the first thing that scares you away from this spread? If you were looking at this spread, what's the first thing that everybody says, oh, that's why I don't do spreads. I don't like spreads. Right, the cost, the margin, the risk, because what do you see right here? You see max loss 251. And what's the first thing that comes to your head is I can enter this trade and I can lose $251 on this trade. Man, I want to go back over to that $70 binary right now. I like that a lot better, right? That's the first thing that comes to mind. And it's the biggest misconception with spreads. Yeah, Rudy's like, yeah, correct, exactly. I pull that up and I see 251 and I say, no way. That scares me. And let's stop and think for a second here, okay? When you're looking at a binary and the binary says max loss 75, max profit 25. Well, with a binary, it's yes or no, all or nothing, right? Like down to a few seconds before expiration, down to 1/10 of 1 pip, that number you see right there in a binary can be just all or nothing. It can be gone in no time, right? And so what scares you is when you see that on a spread, you have the same fear of, oh man, by the time this expires, I'll either lose 251 or I'll get the, oh, I can't do that. All right, and it's a misconception. All right, it's a misconception of either, for one, you don't fully understand spreads, but for two, it's just a misconception of being a binary trader, is you're so used to all or nothing. Okay, so used to all or nothing. But keep in mind, spreads are not all or nothing at expiration. Spreads are $1 a pip. Okay, so for example, let's look at something here. Let's pull this chart back up. Let me get rid of some of the stuff that's already drawn on here. All right, and again, for some of you, this may be very elementary, you know this, but this is very important for us to understand for those of you that don't. I'm going to draw a box on here, and let's just say this is the spread. All right, now this is not the correct floor and ceilings, but see where the market is here. Let's say that I am going to sell a spread because I have some kind of indication here telling me to go short, that the market's going down. So I want to sell the spread saying it's going down. Okay? Now, or let's just change that around. Hold on, let me pull this up here. I'm going to move this. Give me 1 second. Let me tear this off. Give me just a second here. I want to show you something. I want to be able to put this side by side for you. And tear off ticket. There we go. Okay. So let's say that I want to buy this spread right here. Okay. To say that the market's going up. But let's say that I'm wrong and the market goes down. And let's say that the market goes all the way to, what was the lowest it was at earlier today? See, it came down here, came all the way up. What if I say, nope, it's going to keep going up, I want to buy the spread. But I'm wrong and it comes all the way down to here. where it was earlier. Where is that at? See the price? $13.73. Where's the market at right now? $13.89. What's that difference? If it were to come all the way back down to that low of earlier, yeah, about 16 pips. Okay, so if I think the market's going up, but I'm wrong and it shoots all the way down here to the low it was earlier today, how much did I lose on a spread? I lost 16 bucks. So if I think the market's going to go up, but I'm wrong and it comes all the way down to like the low of earlier today, what do you think I'm thinking right there? Hey, I was probably wrong, and it's probably time to go ahead and get out, right? So I had to do that trade, I had to put up how much? I had to put up 250 bucks, right? I had to put that up out of my account just to get in this trade. That is the max loss if the market went down 252 pips against me. Do you know how far I'd have to squeeze this chart to find 252 pips below us? Do you think I'm going to sit there and watch this chart go down 252 pips against me before I close this trade? Okay, so this, when it comes to spread, you're not talking about max risk. You're looking at realistic risk. Okay? This max loss is not your realistic planned risk. Okay? Yes, I had to put up $252 to get in this particular spread. But if I'm wrong and it's coming down against me 16 pips to the low of the day, or even 20 pips, I'm going to close it out. And how much did I lose? 20 bucks, 16 bucks, 20 bucks, right? So the market went against me 20 pips. Yes, I had to put up 252 to get in the trade, so they take 252 out of my account, they put it on hold, the market goes against me 20 whole pips, I get out, I lost 20 bucks. So I get, I get the margin back minus my fees and the 20. If I bought a binary right here, okay, if I bought a binary or sold a binary or whatever, bought a binary right here, and the market closed down 1 pip below at expiration. So I bought a binary for 70 bucks, it closes 1 pip below my binary. At expiration, how much did I lose? So hey, I only had to put up 70 for the binary, not 250. But the market closes 1 pip below my binary strike. At expiration, I lose the whole 70 bucks. On the spread, it went against me at 20 whole pips. I only lost 20 bucks. Yeah, Mark, you can get out of the binary at before expiration if it's going against you. But what if it's a couple pips in the money and it looks like it's going to expire in the money, so you leave it, and then right before expiration it just pops down against you 2 little pips. Just in the last couple seconds, just 2 little pips and it's gone. What happens if a spread goes down 2 pips against you right before expiration? It's $2, right? Yeah, it's $2. Okay. So Mark says, does the spread lose less when it goes against you versus Brian? That's exactly what we're talking about, Mark. If you bought a binary for 70 bucks and the market closed 1 pip below your strike price, you lose the whole 70 bucks. If You buy into a spread, and at expiration, the market closes 1 pip below where you bought your spread, you lost $1. Okay, it's $1 a pip. It's not an all or nothing instrument. Spreads and binaries are completely different. Okay, it's just what scares people about spreads when they don't understand them is the maximum amount that has to be put up and the max loss. All right, so does that make sense to everyone? The difference of the risk on your binary at expiration is all or nothing. This larger amount of risk that shows on a spread, that's the amount you have to put up, and it's $1 a pip. The market can go 20 pips against you, and you say, okay, I was wrong, let me get out. It's only $20. Okay. Let's see here. Mark says, I meant prior to expiration, if you're down 10 pips on a spread, 10 minutes later versus binary, 10 minutes later, you're down the same amount. No, binaries and spreads work completely different. If you're down 10 pips on a spread, you're down $10. If you're down 10 pips on a binary, it could be worthless. It could be completely worthless before expiration. I mean, take a look here, for example, what I mean by that, Mark. If you go over here to binaries, and let's just look at 8 o'clock. Let's say you had bought this binary right here, $13.95, and you were wrong. Well, let's say you were wrong and the market went down like 10 ticks. Okay, so look at the difference of 1403 to 1495. There's not even a bit that you can't even get at. It's worthless. 10 pips difference. Does that make sense? Okay, or let's say that you bought this, or let's say that you bought this one, this 1391. Look at the difference of, you know, at about 1401, it's worth 50 cents compared to 58 bucks. See the difference? I mean, $58 difference there with 10 pips compared to $10 on a spread. Okay, so Oscar says, how much is one tick worth on indices like? Well, with Nadex spreads, okay, it's $1 a tick. Okay, the way that it ticks. Now with future, you know, when you're trading actual futures contracts, you know, each market has a different tick value. You know, some are $5, some are $10, and so on. But with Nadex spreads, it's $1 a tick. All right. However that market ticks, all right, which is the last number shown here. Like for example, what was your question on S&P? If you go to indices spreads, okay, and the S&P, which is the ES, or which is the US 500 with Nadex, okay, as you see here, it's 2040.0 to 2080.0 and so on. Each one of these ticks here is $1. Okay, so you know, Matthew, why they're not 5-minute spreads? Because spreads work very differently. I mean, sometimes the market may only move a few ticks in 5 minutes. All right, and to get into that for $2 or $3. Okay, but the point is, you can get into any spread you want and get out of it 5 minutes later. So technically, I mean, with the spreads, you know, I mean, for example, let's just go right here. You've got spreads that go 4 hours, some that go 2 hours, some that go all the way till 3 p.m. tomorrow. If you want to hop on a spread and be out of it 5 minutes later, you can. So technically, since they have spreads going all the way till 3 p.m. tomorrow, there's no reason for a 5-minute spread because it's not like a binary. It's not all or nothing. It's $1 a tick. So having a spread that goes all the way till tomorrow afternoon, it's no different than having 5-minute spreads, 10-minute spreads, 30-minute spreads. You can get out anytime you want, 5 or 10 minutes. Okay, it's not an all or nothing 0 or 100 like a binary. It's $1 a tick. All right, so if you want to be out in 5 minutes, you can get into one, and if the market moves and you made a little bit of money in 5 minutes, you can get out. Okay. Let's see here. Yeah, Matthew, absolutely. You definitely want to take a look into spreads. Like I said, binaries, a lot of, including myself, I started out with binaries. I didn't understand spreads, okay? But honestly, and I trade binaries all the time, okay? I trade them every day. We trade them in our rooms. I love binaries. I'm not telling you to not do binaries, but I love spreads, I prefer spreads. I think newbie traders should be trading spreads, okay? And I'll show you a little more to it here, okay? Let's see here. How can you get into a spread and still make money as the entry level is almost always where the particular swing ends? Vita, I'm not quite sure what you mean by that. Maybe if you can explain that question a little bit better. I mean, for example, I'm not sure what you mean by that. If we pull up right here a chart of the euro dollar right now is about 13.89, okay? If we look at Forex spreads, euro dollar, let's see here. So it's at 13.88. I mean, these spreads go up to 15.15, 16.40. I mean, you've got plenty of room in those spreads. If we pull these spreads up here, again, 13.89. This one goes from 11.40 up to 16.40. You've got plenty of room in all those. I'm not quite sure what you mean by that. You have tons of different options of spreads. Some that go to 8, some that go to 9. There's a lot of options there. Okay, and then every hour on the hour, like on the Forex, you've got new spreads that open up with new floor and ceilings. Okay, so there's plenty of options there for you. All right, so now, yes, you might say, well, I get all that, but you know, what if there's not a whole lot of movement in the market? I could make more on a binary, and that is true sometimes. When there's not a whole lot of movement in the market, you might be able to say, well, hey, you know, the market moved, you know, just a few pips and my binary expired profitable. I'd only made a few dollars on a spread, so I prefer binaries. Okay, that can be true to an extent. Okay, but again, just one pip against you and that binary can be not profitable. So I want to give you another example here real quick, and we're going to keep tonight's webinar pretty short. I just kind of want to open up your mind to a few things and have you start looking at a few things differently. Okay, let's say whatever strategy or system I'm trading, let's just say, for example, I want to trade a spread, okay? Or let's say I buy a binary for 80 bucks. What is my risk at expiration? 80 bucks, right? So I'm going to risk 80 bucks and do a binary. Well, yes, this spread did cost me more to get into, right? But is this cost real risk, or is it more about realistic plan? Is max risk the realistic planned risk, or is it just the total amount I have to put up in margin? Okay, it's the amount I got to put up in margin. So for example, yeah, like a holding risk, there you go. Okay, so the example I used earlier, if I'm going to get into a spread, okay, if I'm going to get into this spread and I want to buy the spread because I think the market's going up, okay, but let's say the market goes down against me 20 pips, right? 20 pips to right here. That's a pretty good amount. That means the market's going against me quite a bit, right? I mean, that's a good amount for the market to go against me. That's a good amount for me to be wrong, right? Does everybody see that? So if I bought a binary for 80 bucks, the market, what am I risking at expiration? If I buy for 80 bucks a binary, how much money am I risking? $80. Okay. If I bought the spread to go up and I'm wrong and it went down all the way down here against me, 20 bucks, how much did I lose? Okay. What if I bought 4 spreads? Yeah, if I bought 4 spreads and the market went down against me 20 pips, I'd lose 80 bucks. So, granted, yes, it's going to be more margin for me to have 4 spreads. But if I had one binary at $80, I'm risking 80. If I had 4 spreads risking 20 on each, I'm risking the same $80. Correct? Does that make sense? I'm just trying to open your mind here to a few things. So I'm risking the same amount. On that $80 binary, let's say the market goes up 5 pips, it closes 5 pips above my binary strike. I win the binary, correct? The binary is profitable, correct? What's the most I can make on an $80 binary? 20 bucks. Because at expiration is worth 0 or 100. That's the very most I can make on that binary. No matter what. Whether the market goes 1 pip above my strike or 100 pips above my strike, I can only make 20 bucks on the binary. So if I have one binary or I have 4 spreads, my risk is the same, 80 bucks, right? But for me to lose that same 80 bucks on a spread, the market has to go down 20 pips. A lot, right? 20 pips. For me to lose that on a binary, all it has to do is close 1/10 of 1 pip below. So which one, for the same amount of risk, which one's giving me a lot more room to be wrong? Obviously the spreads, right? Now, what happens if the market closes 3, 4, 5 pips above my strike on the binary? The binary wins, I make 20 bucks. But what happens on the spread? What's my max profit? 248. Why is my max profit 248? That means I've still got 248 pips to the top of my spread. So what happens if I'm right and the market goes up 50 pips? Well, market goes up 50 pips, my binary won, didn't it? I risked 80 bucks, market went up 50 pips, I made how much on my binary? $20. How much did I make on 4 spreads when the market goes up 50 pips? I made $1 a pip, so that's 50 pips times 4 spreads. So I made $200. Yeah, Marianne, $50 per spread, but I had 4 spreads. Okay. Well, Dan, we're looking at the middle spreads. All right, the example I'm showing is the middle spread. Okay, so yeah, there might be 2 or 3 pips in there, but we're not getting technical here. We're talking in general. Actually, it wouldn't matter, Dan. At expiration, it doesn't matter because we're not paying. Well, proximity would matter, but not the bid offer because we're not doing that. So does everybody understand that? I have a one binary at $80 risk, or I have 4 spreads for the same $80 risk. And instead of 1 pip difference, win or lose on the binary, I've got 20 pips difference to equal the same risk on a spread. But when the market takes off in my direction and I'm right, I can only make 20 on the binary, but I could make quite a bit more on a spread if the market moves. All right? Does everybody see that? Is there any questions on that right there in and of itself? Okay. Yeah, Matthew says the name of this webinar should be Why Spreads Are Better. Well, and there are times to use binaries. I trade binaries a lot. Like in this example right here, the market's not really moving. Like if I was to take this signal right here, if I'd have taken that earlier, I might have done a binary and sold a binary up in here to say, it's going to expire below, because there's not a lot of movement. This might not have really been a spread signal, right? Because there's not a lot of movement going on. So that might have been a good in the money binary sell, right? Okay. But do you see the difference here of what I'm trying to relay to you of the same risk versus the potential reward? Let's look at something else here. Does that make sense? Any questions just on that I'm trying to explain right there? Let me know before we move on to another quick example here. Okay, everybody good? All right, I want to show you a couple other things here. I'm going to pull up, let's pull up a chart from today, okay? And again, I don't know what strategy or system you're trading. I'm just kind of showing you some examples from some systems that we trade. Let's back up to this morning. This is on NQ. This is the Nasdaq, okay? Don't let this chart overwhelm you and so on, okay? In a nutshell, this is a system that we trade. This is a trending system that we trade, all right? And you can apply what I'm teaching you here to whatever trending system you do. Our trending system here, basically, when the market's coming off of one of these red, brown zones, we're looking for a sell. When it's coming off a green zone, we're looking for a buy. So when the market's coming off a red zone here, and we get these down arrows and all these other indicators are red, we're selling, okay? So this is early this morning at 7:50. Let's go forward a little bit here to after the market open. Okay, so right here, this is at 10:13 this morning. So the market's at one of these red zones. Everything's saying to sell. All right, and what I'm doing is I'm going to sell, and I'm going to follow this sell all the way down until the market comes back. See these blue predictors? When the market breaks these predictors by 3 ticks, I'm going to get out. So let's just say that I had a signal saying go short at 10:13, right? Well, all right, so the market's going down, 10:13. Let's say that I wanted to sell a binary, okay? It's 10:13, so I want to sell a binary that expired at 11 o'clock. Here's 11 o'clock. So let's say I sold a binary. At 11 o'clock, it expired profitable, right? Expired profitable. So depending on where I sold that binary, maybe I risked 60 bucks to make 40 bucks. Okay, not bad, right? It won. So I risked 60 and I made 40. Well, let's say I'd sold a spread up here at 45.17. And I followed it all the way down, and I got out right here at 45.04 or 45.05. So that's 12 points on NQ, and NQ ticks in 0.1. It's $1 a tick. So that would be $120 on a spread. Does that make sense? Do you see that? Now, if I sold that spread and it went against me, I'd get out up here. See here, 52. So I say it risked about $30-something, right? So let's say I had 2 spreads to equal the same risk of about 60 bucks that I did on the binary. So on 2 spreads, same risk as my $60 binary, I would have made $240 on this move. Not just $40 on a binary. Yeah, Mike, on the middle spread. Does that make sense? Does everybody see what I'm talking about? So again, let's say I sold a $60 binary. I'm risking 60 bucks. I made 40. It expired profitable. The binary won. I made 40 bucks. Cool. I risked 60 bucks. Or if I had a spread and I was selling the spread, but if the spread went up against me up here, $30 against me, I was going to get out. So I had 2 spreads. So that way if it moved up against me all the way to the high here, I lost 60 just like I would lose on a binary. okay? I followed it all the way here. I made 240 on those two spreads as opposed to 40 on one binary with the same amount of risk, approximately 60 bucks. Does that make sense? Let's look at a different example. Today, so the market came down here to this green zone, right? Everything's turning green here, kind of heading back up. Let's just say this would have been an entry, okay? Or actually, no, here's a perfect example. So the market's back up here to red zone. We're looking to sell. Get our arrows. Everything's turning red. This is what time is this? 13:10. Okay, cool. So I want to sell a binary that expires at 1400. That binary would have won. Again, that would have won, right? But look what happens right here as we're getting closer, like 10 minutes to go. Ooh, the market's starting to pop up. What do you think your heartbeat's doing right there when you have a binary? You're freaking out, right? Yeah, you're freaking out. Especially if you sold that binary for like 60 bucks. Now all of a sudden it's worth like hardly anything. Remember the examples we just looked at there when the market's popping up? Okay, but it did go down and expire profitable. But let's look where we have sold a spread. Let's say about 45, let's see here. Let's just call it 45.14. We would have stayed in that trade all the way to right here, about 45.04. So about 10 points on the Nasdaq, which again, 100 bucks. If we had two spreads, 200 bucks. So you would have won on the binary. You'd have been profitable on binaries. I'm not saying don't trade binaries. I'm just trying to show you that with the same amount of risk, when the market moves, just keep in mind, the binary, you cannot make more. The binary is never worth more than $100 at expiration. So when the markets are moving and you're getting some bigger trends, you may be right. You may choose the right directions, okay? And you may win your binary, absolutely. But when there's bigger moves in the market, you could be right and it can keep on going, but you're kind of limiting yourself there where you could potentially, when the markets are moving, remember I showed you an example earlier over here of when there's not a whole lot of movement, markets are slow, yeah, maybe you want to sell an in-the-money binary and let it just kind of sit there and expire and expire worth 100 bucks and you make 20 or 30 bucks. Perfect. But when the markets are moving and trending, you're limiting yourself with that binary in a sense, and you can potentially make a lot more with spreads when the market's moving. Okay? So does that make sense? Does everybody see that? Everybody see what I'm talking about there in a nutshell? Okay, and I know some of you are saying, okay, this sounds really good. I don't quite understand spreads. Well, again, I'll review that here for you in a minute of where you can go to watch some basics of spreads 101, make sure you really understand them so you can kind of start implementing these things, okay? Let me just take a look over some of the questions here. So I know there's some few questions coming through. I just wanted to finish getting some of those examples there to you. All right, let's see here. Isn't it best practice for spreads to be the floor? Mark, not necessarily as far as spreads being floor or ceiling. That does give you a little less risk, but you are going to pay a little more premium, okay? You can go back to a couple of the last few weeks webinars we did. We talked a lot about the difference of one spread over the other, okay? I mean, sometimes I use those. Sometimes I use these middle spreads. Let's see here. So if a spread goes above or below the ceiling or floor, the most you can make is 248, regardless of how much over that market moves. Yes, that's correct, Kevin. Like I said, if the market isn't moving a lot, you're tying up a lot of money just to make it. Exactly, Kevin. Yep. If the market's not moving a lot, you're going to tie up a little more to, you know, possibly only make a few dollars if the market's not moving. Okay. Yeah, Mark, that was a, you know, as far as a scenario, a binary, kind of like that one I just showed you right there, you know, when the market's maybe not moving a whole lot, but you're getting a down signal and you know, there's not a lot going on, so you sell an in-the-money binary up here just to let the market kind of stay where it is and expire to get the difference, you know, of say buying or selling for 70 or 80 risk to make 20 or 30. Okay. Dan says, how the heck do you know when you're going to have movement? You need to trade a spread. Well, there's a lot of different things there. A lot of that depends on what strategy or system you're trading. You know, for example, you know, are you trading shorter term, longer term? Are you reading the markets? You know, are you simply looking at your chart and seeing, hey, all right, it's been very, very slow. I don't see a big, you know, potential move there. Or like today earlier, I mean, just look at the timestamps here. Hey, the market's moving. Look at volume. We've got crazy volume. We've got exceeded volume going on. The markets are volatile. If I see the markets are moving quite a bit and I've got exceeding volume here, there's no way I'm expecting the market to sit flat. I'm expecting it to keep being volatile. So I might be looking at a spread there as opposed to a binary. Okay. So yeah, Mike, on like these examples, I do personally like the daily spreads, okay, to give me more time to be right. Okay. Let's see here. Steve, why use a spread instead of a regular trade? Steve, I would guess what your question is there is why use a spread as opposed to just trading futures? Okay, like on NQ, for example, here. Well, you can trade futures. Why would you trade a spread? Well, a spread would be $1 a tick, okay, on the Nasdaq, for example. And the Nadex spreads on NQ tick in 0.1. So meaning a full point from 1520 to 1521 would be worth $10. Okay, so if you did two spreads, a full point would be worth $20, which would be just the same thing as trading futures. On a futures contract, it ticks in quarters and it's $5 a tick. So on NASDAQ, for example, now other markets are different. You have to equate them. Trading two spreads would be like trading a futures contract. What is the benefit of that? Well, the benefit of trading spreads is always the capped risk. Because with a spread, you cannot, if I'm buying a spread and the market goes down against me, I can only lose money down to the floor of the spread. So if there's a quick move, flash crash, I have a max loss. If I'm wrong, I cannot lose any more money below the floor of that spread. As to where with a futures contract or spot Forex, it can go way against me. I can potentially lose more than what's in my account. Okay, so that is the whole idea behind Nadex, and the whole huge benefit to Nadex is limited, capped, known risk ahead of time. Okay, you have capped risk with those spreads and with binaries. Okay, let's see here. Yeah, Dave, I do. I always use those. Let's see here. Josh, if you buy the upper spread and sell the lower spread, what's that called? That is called a straddle. Okay, kind of straddling the fence there. Okay. Let's see here. Olympia says, how many pips should I wait until I close out my position? That just really depends on your strategy or system. Okay. You know, a lot of times we talk about on trades, you want to at least go for a 1-to-1 risk-reward ratio, meaning if I'm going to, you know, like an example we showed earlier, for example, if I'm going to if I want to buy and I want to go for, say, $20 profit, well, but if it goes against me $20 risk, then I'll get out. I don't want to risk $100 to potentially only make $5. Right? I want to keep a good risk to reward ratio. But really that boils down to having a good system and having kind of ABC rules you follow with your system. Like on the system I showed you here. Remember I said, hey, if I go short, when I get all these indications to go short, I'm selling. I'm going to follow it all the way down. I'm going to get out when the market comes 3 ticks above these blue predictors. That's where I'm going to get out. Okay? If I'd gotten into this trade and it right away went against me, well, if I'm getting in right here, if the market pops against me all the way to that high, the swing high here, that's where I'm getting out. I have set rules, ABC, as I get in here. If I'm wrong, I get out here. I'm following my profits down to here. Okay, this here is what we call our iZone sharpshooter system. Okay, Clifton. So, all right, guys, I don't want to keep you too much longer here. I know some of you have some questions. If you have any more questions, feel free to hit us up over on the Apex side. I'll give you some more information there. Just wanted to open your eyes a little bit to the difference of binaries and spreads and understanding that there's different times to use each. And the big thing I wanted to drive home tonight was when you're looking at these spreads, do not let that number scare you off, because you're thinking like a binary trader. You're thinking all or nothing. I'm going to lose this $252 all or nothing based on a pip or two, and that's not the case. All right, you're planning your risk, you're managing your risk, you're knowing when to exit your trades, and you could potentially, for the same risk as a binary at expiration, you could potentially have more than one spread. And when the markets are moving, you're limited on what you can make with that binary. You are limited on what you can make with the spreads, but the spreads you might have a lot more room and potentially a lot more profit for the exact same amount of risk. Okay, so all right, guys, again, I hope that opened up your eyes to a few things there to think about. Again, with binaries, it's not all or nothing. Okay, it's not based on 1/10 of a tick. All right, it's $1 a tick. Okay, Kevin, you said when you sell a spread or a binary, do you actually mean purchasing a put option? How can you sell an option unless you already bought it earlier? Well, when you're looking at the Nadex platform here, okay, it's simply a yes or no. All right, when you're looking like at a binaries, for example, okay, if I believe this statement is true, that the market will be above 1393, I'm saying yes and I'm buying that. If I believe that statement is false, I'm saying no and I'm selling it. Okay, don't necessarily try to put it into purchasing a put option or selling. Don't try to put it in that same mindset if you're familiar with already trading options. Okay, it's look at it as a simple yes or no, true or false statement. It's either yes, I'm going to buy it, or no, I'm going to sell it. Okay, all right, just to kind of keep it easy there. Okay, now, so again, hope I opened your eyes up a little bit there. Think about some of these things. Look at these things when you're trading. Look at your differences of binaries versus spreads. Check out some of the max risk and rewards, and hop on to Nadex.com. Get your free demo account so you can kind of start practicing. If you're currently a binary trader, continue trading your binaries and open a demo account, and when whatever strategy or system you're using that's determining whether you're buying or selling a binary, keep doing that, but then buy or sell the spreads as well. Start playing with them, see how they work, see how it works out when you match your risk that you're putting on a binary with spreads in your demo account. See how it works out for you. Start playing with them. Okay, summary here. Always suggest new traders. I would always suggest that new traders start with spreads. Okay, I think they have a much lower risk for you. They help you learn to read the markets and follow the markets. If you do binaries, use good risk management. Like for example, maybe do one contract per $1,000 in your account. Don't be doing 7 or 8 binaries at a time if you only have $1,000 in your account. Have good risk management. And again, I'm not telling you binaries are bad. I like them. I trade them all the time. It's what are you more familiar with? What's your account size? What's your experience and trading schedule? But again, go to Nadex, get a free demo account. Again, hop on over to apexinvesting.com. Like I said, we've got a lot of free education over there. We have some step-by-step training courses that will walk you through. If you're brand new to binaries, brand new to spreads, we have some step-by-step courses that explain spreads and binaries step-by-step, how they work, risk and rewards, proximity premium, everything. Got some strategies and systems over there, some free information for you. Definitely hop on there and check those out for those of you that are new. We have a great we have a binary and spread scanner. Makes things so much easier, you know, as opposed to being on, you know, having to kind of hop back and forth and be like, okay, well, you know, I had these binaries here and these binaries here at different prices, and 3 a.m. there's different going back and forth. You know, we have some scanners that kind of put them all on one page for you. You know, like for example, if you're looking for euro dollar binaries, it'll put them all on one page for you, the ones that expire at 4:35, 7, all the way down. Shows you the binaries, shows you the pricing, shows you risk and reward, kind of everything on one page. Same thing for spreads as well. Help you easily find the right spreads. And that's a free tool that you can check out over there as well. So, all right, guys, I appreciate your time. I appreciate you joining us tonight. Hope this opened up your eyes to a few things. Like I said, we do these webinars for Nadex every Monday night at 7 p.m. Eastern Time. So look forward to having you with us each and every Monday. And once again, I appreciate your time tonight. Hit us up and let us know if you have any questions. We'll be glad to answer those for you, and look forward to seeing you next Monday. Have a great one. Thank you very much.